So it's funny, 2022 has created such an unbelievable connective tissue between folks that are 20, 30, 40, and 50. And what do I mean? I remember in the late 90s, I was buying a bunch of internet stocks and doing really well. Certain clients that we had at that point were like making $400,000, $500,000, $600,000. And all of a sudden, just one day it stopped. And it reminds me of what happened with Bitcoin. For all the folks that are in their 20s and 30s right now, I think that Bitcoin was doing really well. People were like doing HELOC loans, cashing in stock accounts, the whole 9 yards, because Bitcoin was going to change their life. And that fell down as well. So what's the story here? At the end of the day, people will always say, and I hear it all the time, should I pay off my debt first or should I start investing? And my question to that is, well, why does it have to be an end or? Why can't it be an end-end? So we're going to get into specifics on what the mindset could be. I'm not going to say should. That's not my place to tell you what to do. But I'm going to tell you what we do and what our smartest clients do. And at the end of the day, it can be both strategically if it's tied into your core values, your investment philosophy, and most importantly, how you view economics and what you want your money to look like later on. So now we're going to talk a little bit about some examples of debt. Specifically, what are examples of bad debt, right? And we like to call that non-preferred debt, credit card debt. You know, I have a partner of mine that opened up a law firm on his credit card. Although that was non-preferred, at that point, there was no other assets he could leverage to get that. So he used his credit card, but, you know, within a couple of months, he paid it off. And that's an example, an outlier of using credit cards to really kind of make sure your business is going to take off. But for the folks that have credit cards that they live on, and listen, I know right now, as I do this video, inflation is 8.6%. As of July 2022, we don't have August numbers yet. We know that interest rates in September are going to go higher. We know that's not going to stop anytime soon. So I know by the 20th of every month, you folks could be running out of money. And in that scenario, if you're living with a scarce mindset, if you're living in a paycheck to paycheck mindset, I'm not going to cure that in this moment. But what I am going to try and do is plant the seed that could be the foundation of your explosive growth going forward. And this ties back into what does your 9 to 5 look like? And then what happens after 9 to 5? You can't just leave your job tomorrow if you have no money to start something else. So if you're accumulating debt because you're in the cycle of 9 to 5, you got a husband, a wife, kids, sports, events, everything that's part of normal living. We know gas is higher. We know that food is higher, right, because of inflation. And the market's kind of like going sideways right now. And we know that maybe some Bitcoin things that kind of gave you some opportunities in the past isn't happening. And I'm saying, folks, don't become traders. Don't become day traders. It is it's like getting hit with a lightning bolt, the example of being a successful trader in both up and down markets. So I would avoid that at all costs and watch out for the folks that, you know, used to tell you to do Bitcoin, but now they're on islands teaching you how to become better salespeople because they're out there as well. At the end of the day, it really comes down to don't accumulate more and more credit card debt. Interest rates are moving. So now you got to start moving, you know, your credit card from one interest rate to a lower interest rate, and then taking that difference of whatever the savings are going to be and maybe knocking down some of the principal. Longer conversation of bad debt and how we can sit down and do really a financial audit on what that would look like for you. I can't just say it in this video because I don't know who I'm speaking to right now. Everybody's different, have different circumstances. But very simply, there's ways to look at where you're deploying money on a monthly basis, what that deployment looks like. Is it optimal or suboptimal? Can you recapture it? If you do recapture it, where are you going to put it? But listen, if there's no extra money right now and your interest rate is higher and you can go to lower interest rates cards, that's your first move. And then you want to build off that, but start figuring out how you could get extra hours at work, how you could show that you're a better worker than Joe and Mary next to you, and you get the overtime so you don't get laid off like they're going to get laid off. And then in that extra money, you want to use that to start paying down this debt. So we're still back on, do you pay off your debt or do you invest? And I don't think it's an end or. I think it's an end-end. Listen, if somebody has a big debt and the question is, hey, Rob, I got a big debt. Should I invest? Well, the answer is yeah. Let's look at what the big debt is. Is it big credit card debt or is it a mortgage? Is it preferred debt that gives you a write-off? Like, that's an important thing to understand. But equally on top of that, what does the monthly cash flow look like? Because I can tell you right now, when we look under the hood and we do a deep dive, we could figure out if there's money that's going in directions where, you know, it's not performing best for you. Maybe for somebody else it is, but for you it's not. And maybe we redirect that into a partial savings and a partial reduction of debt. But let's really dig deep in the comments below and describe what a big debt looks like for you. Is it big credit card debt? Is it debt on different properties where you have a renter coming in? Is there opportunities to maybe do some sort of refinance if you have interest rates that are over 5 years old from now? I don't know. These are really good questions, but I think it's important to really get educated on what that looks like. Go ahead and comment below. We also have the Epic Wealth Guide as well as the Financial Freedom Map. Those are links that you could see below. And if you want to learn more about those, go ahead and hit those links. But at the end of the day, it's about education. Once again, though, you can get educated, but you need to know what your core values are. You need to know what your investment philosophy is. And you really need to know how you view money in your heart. Is it scarce? Is it abundant? Was it handed down? Or did you make some mistakes that created some fear? So it's important to look into that. And some folks, what they do is when the market goes up, you have, investment income or investment income expense, which is like line 13A on a tax return. You want to get with an accountant on that. There's some sort of write-offs there. But I'll often ask, hey, Rob, can I use my investment income to pay off my debt? Yeah, but what's the investment income? Is it rental real estate? Is it, are you in the S&P 500 where you have dividends? Like, what does that look like? What does it look like based on your monthly cash flow? Remember, at the end of the day, it still comes down to, are you or are you not running out of money before the end of the month? And if you're not, then you want to knock down that debt as much as possible right now. And if you are, then it really comes down to a strategic sit down, a look under the hood to see exactly money in, money out. We call that a cash flow analysis. And if we could zero in on dollars that are suboptimal, not performing well for you, we will show you that and how you can redeploy that back into your world. So always remember, it really comes down to each circumstance, and go ahead and book an appointment below. There's no obligation on your part. There's a chance to really be able to sit down with us and figure out what's what. Mindset matters. No matter what you do, whether it's working out, eating right, becoming an entrepreneur, becoming wealthy, coaching a team, whatever the case may be, mindset matters, messaging matters, right? So if I'm going to sit down and educate somebody on debt, my thing about that is, okay, you need to say to somebody, or what I say to somebody is, how do you use debt? Do you use it for your groceries, or do you use it to expand your business and your wealth? Those are two different sides. And by the way, the one that uses it for groceries, and I pray, listen, my parents bounced checks and ran out of money every month. So I get it. I'm not confused at what that dynamic looks like underneath inside the house at the kitchen table. But there's a way out of that. And there's a way of understanding how to go from a scarce to an abundant mindset. And there are strategies, techniques, modalities, and methodologies on how to be able to do that. Go ahead and click the link below. I'd love to sit down, me or my team members, and share with you what that looks like. And it really comes down to the proper questions that you ask yourself, empowering questions, because at the end of the day, what will begin to happen is if, in fact, you start going down the path of accumulating non-preferred debt, it's also tied into a scarce money mindset. And it's also chewing off more than you could handle, committing to things that you should have thought more about, which ties back into instant gratification. It's almost like that now mindset. Let me get transactional. And everything we do is not based on that. It's important to understand that when you do planning or when you do anything in life, you want to look at a map. Some people know where they want to go, but they don't know where they are. And it's also like a denial factor. If I'm going to build a house, I need to know the foundation. I need to get the right, bricks and wood and all that other stuff. But if the foundation is off, if I'm lying to myself about my money, if I'm lying to myself about interest rates, if I'm lying to myself about my income, if I'm lying to myself that I don't have a side hustle, even though I may have joined up for something and I think I have a side hustle. What do I mean by that? I joined Tony Robbins in 2017. I thought I graduated. No. I had to do work after that. I didn't realize that, right? I was like, yeah, I'm with Tony Robbins now. Like that meant something. Although Tony's teachings are incredible, faith without works is dead. If you don't work the principles, I'm always training my team members here to work all the things they learn with me. And 9 times out of 10, they don't do it because they're still stuck in their rhythm. And sometimes money corrupts. If you're not right within, the money corrupts and you think you're doing more than you should, not doing enough of what you can do. You could always level up. You could always increase the standard. And increasing the standard means you're going to sacrifice certain things in your life, whether it's 7 dinners a month down to 4, whether it's carpooling for now, whether it's not hanging out with this group. Even if they make you feel good, you may want to hang out with this group, which is going to challenge you and make you level up. And that's where the dichotomy comes in. And that's where you have to understand the difference between pain, pleasure, principle. A lot there. and it is tied into preferred and non-preferred debt. It is tied into should I pay off my debt or invest? You shouldn't. You should do both, but you have to do it with the right mindset. Go ahead and click the link below. Add some comments, book on our calendar. There's no obligation. We love to share some information with you, answer any questions you may have, and help you get on the path of understanding not only where you are, but where you want to go. And wherever you want to go, make sure it's not back roads, stop signs, and dirt roads and potholes. Make sure it's a highway that is smooth, that can get you there efficiently and effective. Thanks for checking us out.